Hello to our viewers. I'm Jen Kohls of Richardson Capital Management, and I'm joined with Dan Brown, our Director of Investment Management. We're here to provide the economic and investment update for fourth quarter 2025. The markets ended the year on a positive note. Both stocks and bonds registered solid gains not only for the fourth quarter, but also for the entire year. The bond market had its best year since 2020, with the Bloomberg Aggregate Index posting an advance of over 7%.
And stocks did even better with the S&P 500 up almost 19%. This was the third year of the bull market and the third year where stocks were up double digits.
Analysts have been saying that 2025 could be a year described as a time when stocks climbed a wall of worry. Dan, can you describe what that means and perhaps provide some examples from the past year?
So the wall refers to some investor concerns or anxiety around certain events that should logically suggest that the stock market could fall. And the climbing refers to the fact that generally the market looks through these investor issues and generally advances. So this is exactly what we've seen so far in the past year. And the big takeaway from this adage of climbing the wall of worry is that investors, again, should not be derailed by maybe some short-term events. Generally, the stock market looks through that and provides some long-term strong performance. So we shouldn't try and time the market and wait for like a perfect investment scenario because generally that means you've missed the bulk of the gains. So some examples that we've seen from this past year where, again, stocks climbed that wall of worry. Think back to early in the year during the tariff concerns, the stock market went down about 20%. There were a lot of analysts and economists expecting some sort of recession from these tariffs. That didn't happen. Another event could be some of the geopolitical military hotspots that we saw around the globe. And then lastly, the longest government shutdown on record in the fall. Again, a lot of people were painting a fairly pessimistic scenario. And again, that all came to pass. And again, another positive year with double-digit gains for the stock market.
This past year, we've talked quite a bit about the strength of corporate revenues and earnings, specifically how much investors underestimated their ability to grow. Dan, how strong were earnings surprises for the past quarter?
Earnings surprises were very strong. And the reason we've talked so much about earnings this past year is because we felt that with stock multiples fairly expensive, that the bulk of the returns or the gains from the stock market would come from earnings growth. And fortunately, that's exactly what we saw. Basically, we think we're going to end the year 2025 with about double-digit earnings growth. So again, it was a very important catalyst for this past year. We think it'll be another important catalyst for next year. But as far as the surprises that we saw, the first graph we're showing is for the most recent quarter, where we saw historically strong earnings surprises. So we're basically showing all 11 economic sectors here and then roll that up to the overall S&P 500. So what we're seeing here is that the S&P 500 delivered about a 9.4% surprise factor for earnings for the third quarter. And you had all 11 economic sectors also posting positive earnings surprises, with 4 of those sectors being double digits. So again, this is a theme that we've seen the past many quarters here, and we think it'll continue into 2026. And reason for that is the next graph that we're going to show, and that is the percentage of stocks raising their earnings guidance. So this is a longer term chart going back to 2011. And what we see here is basically for the last 3 quarters, you see a pretty meaningful hookup with the number of companies raising their earnings guidance. And we think a lot of this stems back to what we saw with the tariff concerns back in January, February, March, where I think a lot of investors and analysts lowered their expectations as it relates to earnings. And companies had a fairly easy hurdle to jump over as far as exceeding those expectations. And again, we think that'll continue into 2026.
With all that in mind, what is our outlook for 2026?
Yeah, our outlook is still positive. So a number of the catalysts that we think that propelled stocks higher in 2025 will continue into 2026, with the main one being corporate earnings. So just like last year delivered double-digit earnings growth, we think that'll continue into 2026. We think the Federal Reserve will continue to cut interest rates. We think the bulk of the cutting is done at this point in time, but we should expect another maybe 2 to 3 quarter point cuts into 2026. And we think this AI spending boom will also continue. As far as risks that we're paying attention to, it's possible that we get another government shutdown sometime in February. The stock valuations are very expensive. And we think that it's possible that investors sour on this whole AI theme sometime in 2026.
Thank you for sharing your insights, Dan. And thank you for watching. We'd like to wish all our viewers a happy, healthy, and prosperous new year. We appreciate your continued trust and support.